We've just come off a week of massive volatility. We're worried about a US recession. We've got sort of Chinese data we're trying to fold into the mix as well. Europe looks like it's doing its own thing. What are you looking for this week to provide clarity?
Yeah, morning, Guy. So I think that there are a few market indicators that we'll want to pay particularly close attention to, given this sort of slight ratcheting that we're seeing and concerns about the US economy and the growth outlook, and whether indeed, people are getting more worried about a recession. One of them, the Treasury yield curve, pretty important. Looking at that sort of bull steepening that we're seeing, where we're seeing short-term interest rates fall quicker than long-term interest rates, which means that people are betting both on a slowdown and on the idea that the Fed is going to have to cut more aggressively. Have a look at junk bonds yield spreads in the US as well, widening out quite aggressively over the past couple of weeks, pushing to multi-month highs again, showing a little bit of stress there that hadn't really been on the radar too long ago. And then, of course, in the retail space, I think the sentiment there is really important at the moment. We're seeing that show up in the declines in cryptocurrencies that we've seen over recent weeks, and in some of the survey data as well. So the American Association of Individual Investors found that for the first time since 2022, more people in their survey thought that stocks would be lower over 6 months than they would be higher. So that sentiment is definitely starting to shift.